the AHFA, Fannie Mae, HFA preferred rural home buyer program. The rural home buyer program. It can be used in conjunction with the step-up program. The benefits to the homeowner is lower cash out-of-pocket expense to borrowers. How? Because we're waiving the upfront commitment fee of 0.5%. Lower monthly payment for borrowers. How? Because AHFA is subsidizing 1.5% of the upfront portion of a split premium PMI option. Borrower will only pay the monthly amount of the split premium. Can you still use the DPA MCC programs, and why? Yes, you can. If the borrower, if the borrower needs money for a down payment, they can use our DPA program. Also, if they use the MCC program, it will give them more money a month to where it could make their DTI lower. We're going to waive the extension fee on this, so if you need to extend it for 15 days, there will be no charge for the extension fee. This is a comparison of the new program, the rural housing program, and the FHA program. On a $100,000 sales price for both, you're required to put 3.5% down on the conventional product, which would be $3,000, 3%, which would be $3,000. On the FHA product, you're required to put down 3.5%. So you could roll that into a second mortgage on the conventional product. So you could roll the whole 3% up to $7,500 into a second mortgage. On the FHA product, you can only roll in 3%, so the borrower would be required to come to closing with 0.5%. In this case, it would be $500. The principal and interest payment for the conventional product would be about $420.15. For the FHA product, it would be $13.96, and that's financing in their upfront mortgage insurance premium on the FHA, up about $1688.75. The mortgage interest payment on the conventional would be $37.18 a month. On the FHA, it would be $69.55 a month. So your principal and interest and your MI payment for the conventional would be $459.33. On the FHA, it would be $483.51. So that's a $24.18 a month savings right off the bat. Also, when the conventional gets to 78%, the MI drops off. And on the FHA loan, they're required to pay upfront mortgage insurance, plus they would have monthly MI for the life of the loan. The borrower's entry cost for the FHA program would be $990.94, and that's with the commitment fee of 0.5% and the $500 down payment. On the conventional, they would have no commitment fee, and then they could roll their down payment into the second mortgage. These are some key dates to keep in mind. This was opened on July the 13th for new reservations. It will close, loans have to close by September 30th, 2020, and then they have to be purchased by October 31st, 2020. So we have to deliver them to Fannie Mae by 12/1/2020. So you need to keep those dates in mind. The Fannie Mae Rural Homebuyer Program, the program highlights, is designated for properties located in rural Alabama. So if you're going to lock a loan, the property has to be in one of these counties that are highlighted in red. Barber, Bullock, Butler, Choctaw, Clark, Conecuh, Dallas, Escambia, Greene, Hale, Lowndes, Macon, Marengo, Monroe,, Pickens, Pike, Russell, Sumter, Washington, and Wilcox. it has to be eligible for this program, the property has to be in one of those counties. It's the Fannie Mae HFA preferred product. No additional Fannie Mae products may be used. The maximum income limit is at or below 80% of the AMI for the designated rural county. And manufactured homes are not eligible for this product. Okay, it has to be, of course, run DU. You have to get an approve eligible only. There's no refer with caution. There's no manual underwrite. It has to be approve eligible. The minimum credit score is a 640 for all borrowers. Income eligibility is based on the Fannie Mae's income limits, which is lower than our step-up limits, and the maximum DTI is 45%. Origination insights. You want to verify the property is in one of the identified Alabama rural counties that I read off earlier. You want to verify the qualifying income is at or below 80% of the AMI for the rural county. When running DU, you must submit it as Fannie Mae HFA preferred only, which is code 782. Available through additional data screen on the navigation bar. Go to the community lending section and select HFA preferred in the drop-down box and make sure that it's HFA preferred and not HFA preferred risk sharing. Select yes in the community seconds field if you have the step-up DPA, otherwise select no. Run the split premium MI quote. Directions will follow. On the electronic 1003, enter the amount paid for the lump sum portion of the 1.5% on line G. Enter the credit for the MI on line L under other credits and disclose accordingly on the loan estimate. AHFA's subsidy for the upfront portion of the split premium MI is not considered a financing concession, is not subject to IPC limits. The HFA preferred in DU, this is what I was saying earlier under the community lending information. You would make sure you select HFA preferred there and not the HFA preferred risk sharing. Ordering split premium PMI, you may use any approved PMI company, AHFA approved PMI company. AHFA preferred charter level coverage, reduced coverage permitted due to income limits. Check DU findings for the required amount that you need. Select split premium borrower paid option. Select 1.5% for the upfront MI lump sum premium and run the quote and then put it in step 1. Borrower will qualify with and only pay the annualized monthly amount. Lender will pay the upfront portion of the split PMI, and then AHFA will reimburse the lender the lump sum of 1.5% at loan purchase. Lender online. Okay, when you lock this loan in, it's going to be only a 15-day lock is all we're doing. If you need to extend it, you can extend it up to 2 times, which are 15-day locks. We're waiving the extension fee, and of course, there's no commitment fee on this program. So we can only hold a loan up to 45 days. Now, once you get close to that September 30th date, because it's got to close by then, we may not be able to hold it for 45 days because you're going to have to make sure that it's closed by the September 30th date. But it's going to be 15-day reservations, and then there's no commitment fee, and also no commitment fee on the extension. The compliance submission process. Lender makes a 15-day reservation for the Fannie Mae Rural Development Program on Lender Online. Lender submits step 1 and step 2 via Lender Online. Please note regarding the commitment fee is not associated with this program, even though it's going to be on the document. We are not. It is waived on this program. Compliance will review step 1 for the standard step-up documents, adding the PMI quote, which is specific to the program only. The quote will be reviewed to verify that it's run as borrower-paid split premium or split payment premium. The upfront premium reference is 1.5%, and the upfront premium amount is correct as per the first loan amount. Compliance will review step 2 for the standard step-up documents, including DU finance, to verify that it's approve eligible, that has been run correctly as HFA preferred. The income is at 80% or below Fannie Mae's income limits for the area, and the charter insurance is at the reduced rate based on the loan to value. Once compliance has determined the file is complete and meets our guidelines, we're going to issue the conditional commitment, which is our final approval. The conditional commitment will be subject to no changes to the PMI quote or certificate prior to closing without re-review of for the Alabama Housing Compliance. If you have to change the PMI, it will need to be resubmitted and the file would have to be reapproved. The closing documents, standard Fannie, Freddie, note, and Alabama mortgages have to have wet signatures only. The initial and final closing disclosures for the first and second mortgage, if applicable. The lump sum split premium must be shown as a cost to the borrower on the closing disclosure, but a credit should be reflected for the 1.5% upfront premium, so it is not part of the borrower's required funds to close. The final PMI certificate must show the split premium option at the same values as the conditional commitment issued by AHFA's compliance staff. Lenders are responsible for remitting the upfront PMI at closing to the PMI company. All other requirements for loan delivery are outlined in our guide on all regs. This is the new checklist that will be for this program. We still need the reservation accepted printout. We're going to need a copy of the rate commitment form, which has been signed by the borrowers. It's going to be the same rate commitment form as the other programs, but where in the bottom section where you put the percentage for the commitment fee, you're just going to put NA, but the borrower still needs to sign it. And then, of course, there's no commitment fee. If you look at the bottom, it says that we are waiving the commitment fee on this program. Loan review, purchase, and delivery. You want to make sure that you follow the stacking order checklist. What is different from regular step-up? Loans must be purchased by October 31st, 2020. So plan accordingly. We must have adequate time to review and clear the file for purchase. These loans will be given priority in review and purchase. Fannie Mae UCD provided in closed file must be successful with no fatal stops, and it must be transferred to Alabama Housing prior to purchase. The PMI certificate must reflect borrower paid split premium based on the first mortgage loan amount, and this should agree with the note in the conditional commitment issued by us. The initial and final CD must reflect the upfront MI costs with an offsetting credit to the borrower for the subsidy. The only AUS report acceptable, of course, will be DU. Must be HFA preferred only, and it has to be approve eligible. Can't be no refers, it can't be downgraded, no manual underwrites, and of course no mobile homes. Borrowers' qualifying income must be at or below 80% AMI for eligible rural county, and the 1008 DU should match. Underwriter should include the income calculations used. PMI coverage must be correct for charter coverage for the loan to value. Example, 97% LTV would require 18% coverage, and 95% LTV would require 16% coverage. Lenders will receive the MI reimbursement for each first mortgage loan purchased 10/31/2020, and it will be called SPMI reimburse on the purchase advice. And that's it. Are there any if there's any questions? I don't see any in the chat box, but I will leave the chat box open for about 5 minutes. If you've got any questions, you can send them in the chat box, or if you've got any questions, you can call me, or you can email me at tlee@ahfa.com. Please feel free to give me a call or send me an email if you have any questions. And it's been a pleasure, and I hope you all have a great day.